Hey traders, welcome to another episode of Charts and Coffee. Happy Wednesday, everybody. All right, so let's kick this off with just a couple basic things. I want a little housekeeping, if you will. First of all, we have a new issue of the Countdown Trader newsletter. D is for discipline, coming up, where I talk about the kind of discipline that you need for every single trade, whether it's a 1 minute time frame, whatever it may be. But it's a quick update about, well, as you can see here, what I'm doing on 1 minute charts. Because I get a lot of questions about some of my day trading, and that's a great place to start and understand this whole concept for discipline of pay yourself while you can, not when you have to, and that sequence that begins once your first target is hit. So check that out. And then the other thing I wanted to share with you all today, straight from my Twitter feed, you can find me at twitter.com/Raghee Horner, is this really cool tweet here from Northman Trader. And if you notice here, it's a chart of, and if you can't see it, I'll tell you what it is. It's a chart of money supply and the S&P. Notice how they're moving together. So this isn't one of those, you're going to hear a lot of it because people are calling for a more sustained pullback. But this is a really great reminder of knowing why we're up. Employment, forget about it. Earnings, please. We can go through all these things that regular traditional media will say is the reason we're up. Gang, we're up for one very simple reason. We have the capital out there that needs to seek a home, and it's seeking a home in stocks. Not good, not bad. This is just to know why we're here. That way, if you see, and I like to look at M2, oh, this is a chart of M1, but if you look at M2 money supply starting to level off or even dip lower, and then the next domino that would fall would be the purchases for the balance sheet, the assets also flatten out and dip lower, that's when you'll start to see an issue. That's the beginning of your taper tantrum, okay? So just know why we're here. Don't begrudge it. In terms of macro, there's probably not a more important macro pillar than what the Federal Reserve has decided to do with the economy. The rest of it really is just chatter, right? So just keep that in mind, and you can check that tweet out over at my Twitter feed, twitter.com/me. All right, gang. So let's take some questions. Great to see everybody. And let's see, let's start off with, can we please take a look at Apple? Sure. So I've got exposure to Apple. I won't call this a pullback, right? We're not in a situation where the markets are pulling back really strongly, but it is a little bit of a stall. We're finding a range. And it's weaker, right? So like we're finding a range at slightly higher highs, we're finding a range at slightly lower lows, and names like Apple are going to struggle. So you can see pre-market, we're right at the very bottom of the wave, or at the very bottom of the, for me, the validity of the uptrend. It doesn't make it a downtrend below that level, but it does then potentially turn this market more into bullish chop than what I would expect an uptrend would behave like. Either way, I'm still a buyer. So keep in mind that yesterday we had a gap up and we sold off. Today, I wouldn't call what we have a gap down, right? We're not low, we're lower than the close, which is one criteria by which I'll look at a gap, but we are not yet, although we're close, we're not yet lower than the low of yesterday's session. That would be more of a gap. I'd be fine with that because usually we have a gap like that. It's faded. In the case of a gap down, that would be to the upside. So I'm going to just chill and wait for the clearing to end, which is, let's see what the market's mood is after 10 o'clock. And, normally sometimes on a regular week, this is not, we would have this idea of turnaround Tuesday. Well, that would make today, Wednesday, the sort of turnaround Tuesday. So am I looking for some bullishness? Look, I'd like to just maintain a range. Doesn't mean we need to go get a higher high. But if we're seeking where those buy orders are at lower levels, that's fine. Let's go seek those out. Let's get those stops run. And then let's see what kind of range we can find up in this area. That's what my thinking is right now. So are there going to be donuts? Oh gosh, Steve. Oh, I wish. I need donuts like I need a hole in the head. But I am partial to a munchkin. I do enjoy little donut holes. Those are pretty tasty. Just some straight up coffee today. All right. So what are my thoughts on BLDP? So BLDP, I like BLDP. I have a position in BLDP that was built at an agro level where the point of control is. Now, this is where it gets a little tricky. Well, not tricky, but you basically broaden your zone knowing that this is a double green, and then you've got to think about the risk to your account. For most traders, I would recommend when you get in at a more aggressive level, 13, 21, keep a tighter stop. Now we're down actually in the zone of the more conservative buy. It's still a buy, but we've actually left the support of the point of control in the 21 exponential prop dot now to the 34 EMA wave. So it's still a buy, but I don't know that most traders want to sit through that chasm. Some will just take a small hit on the aggro level and then just basically recalibrate and refire the trade here at the more conservative. And I'm still very much a bull on that one. Absolutely. What is my take on SOL? All right. So, well, where are we in terms of earnings? We have a decent earnings window. Sure, this would be a buy. I know we've gone just double yellow here, meaning the bullishness has gotten a little weak, lost a little bit of its swagger, but it doesn't mean it's a short. And I think that anywhere between the 34 EMA on the close and low is valid. But yeah, this is a buyable market. This is a buyable market. Now, I will say, anytime a market sells off, I do like to just go confer with Google and just see what the headlines are behind it. Is it a downgrade from a brokerage? Is it some sort of issue within the company? Is it just, what is the reason perhaps for the weakness? Or, as the broader markets are a little weak, is this just kind of going out with the tide? And those are things that I just want to, confirm. Janet asks, please talk about sector rotation. Janet, I'll keep it a very Cliff Notes conversation here. Sector rotation for me is two parts. It's seeking undervalued parts of the market. Think XLF and XLE last year. Most of the year, XLF and XLE in 2020 were just dumpster fires. And it's rotating out of markets that are at upper ends of their range or in very strong trends, oftentimes parabolic, where it doesn't make a lot of sense to continue to add. If you're an institution or a brokerage or hedge fund, you roll out of those and you roll into things that are undervalued. And it's really a momentum type game. You don't want to continue to engage the market necessarily at new higher highs. I mean, that's what retail folks do. I can tell you for the most part, institutions don't have FOMO as part of their strategy. So what they'll do is they'll go find the undervalued. So if you're wondering in a situation like this, yeah, if the markets continue to pull back, watch how quickly XLU and XLP start looking very sexy to the market. I don't think we're seeing that yet, but that's a way you can look at sector rotation. So thanks for the question. All right, so next up is, good morning, LAZR. Sure, Jose, let's take a look. So nice trend. On the move lower, I'd like to see a little bit more weakness. So let's start the conversation maybe around 34.20. But the closer we get to 33.20, the better this looks. And yeah, I mean, let's look at how we got here, where we are. Again, know the narrative. Right now, sometimes the narrative is just this was an inexpensive stock that found the Reddit boards. And there's nothing wrong with that. There's nothing wrong with that. Just know the why, kind of going back to what I discussed here about this tweet, rather than begrudge what it's doing or saying it's, look, financial media will dismiss anything that retail traders are grabbing with two hands, right? Unless it came from the ideas of the hosts on financial media or whomever they parade as their favorite contributors, they're going to poo-poo a lot of things that work really well. Because let's face it, we don't watch financial media for anything more than a reflection of what's going on in the broader markets. Okay, what's going on? Where are the discussions? Where are the little cocktail parties happening in the markets? Well, we have a new place for cocktail parties, and one of them happens to be what's happening on Reddit. So what do I mean by that? Attention does move markets. So just know what kind of attention a particular stock or sector or ETF is getting. And so I'll give you a really good example. Back in the 90s, this was something that was really fun and effective to do. So let's say you're watching, and I'm not picking on any one of them, but CNBC was on most of the time in the trading office that I was in. And they would, before break, sometimes they would announce, hey, and when we come back from the commercial break, however they'd phrase it, we're going to have the CEO of whatever on. You know what happened to that stock? Again, during the 90s, during those go-go, everyone's a day trader, tech bubble 90s, the stock would start to move higher. And what would we do? As soon as they mentioned it, we'd start buying. And as soon as the interview began, we'd watch a little bit and sell. So why did we do that? It was attention. It was attention. So always look for where the attention is at. And I just mentioned that with LAZR because just make sure you know where the attention's coming from, because that attention's going to be the reason it would continue after a pullback. So just make sure you've got the fuel, in terms of the reason it could go and test some of these swing highs. All right, next up is, do we buy Bitcoin now? Oh gosh. So here's what I'll say about Bitcoin. I'm going to pull up the Bitcoin US dollar, wait for a pullback. No, I don't buy them up here. That's it. That's to say that I think the market's going to go straight up. Here's what I'll say. If you can sit through a $10,000 pullback in Bitcoin, fine. If you can sit through a $5,000 pullback in Bitcoin, again, you've got to ask yourself, what are you willing to sit through? A lot of folks believe this Bitcoin narrative is an easy one. I'm not going to say that we're going to go from 51,000 to 16,000 anytime soon, but it could happen. Think about when we hit that 20,000 way back when, and then we pull back. I'm not saying that's going to happen. Again, hear me out. But when you're playing Bitcoin, you're playing a very different game. If you're playing momentum, shorten the time frame and trade it. But if you're looking to hold it longer term, wait for a pullback. It will come, gang. It just won't come now, right? Not even, gosh, I mean, look at this. This was through Jan 12 through Jan 26. That move right there, if you saw that as an opportunity, then that's really what you're waiting for again. Are we never going to pull back on Bitcoin? Of course, you guys know differently. Of course we will. And if you want to hold it for the longer term, wait for that sale. If you just want to trade this, shorten the time frame and trade it, right? So know what your objective is, know what your risk tolerance is, and know that this, if it's going to continue higher, which I think a lot of people believe it will pull back, it will correct. And those corrections, like we had not all that long ago, right? About a $10,000, $12,000 correction. Those are the opportunities. All right. So thank you for the question. I'm sure it's one that a lot of folks, and by the way, my gosh, we had a special on CNBC, which is great. It informed a lot of folks. And one of the co-hosts was someone I'm a big fan of when it comes to crypto. And look, it's being talked about so much right now. I mean, incessantly, that attention is going to keep this up. As soon as the market, the narrative gets a little weary, as soon as this isn't the conversation happening on mainstream financial media, watch how we'll start to go sideways, wander a little lower. Wait till some eyes are off this, and then I think there'll be an opportunity. I just don't know when it's going to be, right? Okay, next up is, hey there, Jan, what point does an ETF start to catch my attention? Structure. Jan, structure. Right now, I still believe we're in a reflation trade. Yes, we're going to have to sit through possibly a little bit of a pullback. Also know where the market's been a little bit more resilient. I thought the Dow was a little bit more resilient yesterday. Just keep the big picture in mind. So yes, we're not punching to a brand new high. Look how spoiled the market's been for most of February. Most momentum traders will panic, and a lot of the sell-off will come from traders who bought at highs. They're the most dangerous part of the market. And I don't mean that in a disparaging way. They're just the most dangerous part of the market. Traders who build their position at new highs, which is most of the retail environment. Because when the market doesn't continue to do this and reward them, greater fool theory kicks in. And this is not, again, anything other than the psychology that has ruled the markets for decades, So when the market doesn't make new highs, it's absolute turmoil. Sometimes there's a special on television about it. I don't think that's where we're at. It just isn't going to reward folks who just bought at higher highs on Friday or perhaps even yesterday. We're going to see a little bit of that unravel, maybe again, a little bit of a stall. I'd hardly call, even what I'm seeing right now pre-market, I'd hardly call this even a retracement. Think about the last major move and ask yourself, is this even a very, very shallow 38.2% retracement of the last major move, right? Not that I'm tempting it. I just assume the market keep going higher. Those are easy markets to trade, but it's in these pullbacks that we're able to scoop up cheaper calls, better price in the stocks. And the pullback has to be within the context of an uptrend. And I still believe the market by and large is very much in the context of an uptrend, right? But you'll see that some of the markets are rolling over. Look at the Russell. Again, I think some of these folks are going to take advantage of things like RTY, IWM, KRE, and scoop some of this up, right? I really do. So I'd keep an eye on that. All right. So next, and by the way, KRE didn't even flinch. Look at that. Didn't even flinch. And by the way, how is this set up? This, gang, look at that. This sets up that within the context of an uptrend. That pullback sets up that resurgence, right? That bounce within the context of an uptrend. All right. Next up is, let's see. Hang on, again, let me catch up to the questions here. And thank you, as always, for all these questions. Would I sell at the market open, Paul? No, I typically will give the market 30 minutes. Yeah, for the clearing, I will typically. So if a stock gaps down, an ETF, anything that I have, I will usually give it the clearing range to settle down. Right. Yeah, I won't sell during the clearing. No, very rarely. I like to give the morning, especially if we're gapping down where the typical expectation, as a trader, I'm thinking, yeah, we might see a fade. So even if I want to get out of it, I'll have a better shot at getting out with less of a hit. And that's normally what we see. So I just play the probability. So thanks for the question. All right, let's see what else we have here. Money flows to where it grows. Yeah, I think sometimes money flows to where it can grow, and certainly money will flow to where it's growing. Yeah, that's an interesting way to look at it for sure. Gold, gang, I know I've been skipping record, but no, I'm not that interested in gold, gang. If we are going to buy gold, at least now, the last 2 days are where I'll say, yeah, we're trading down in ranges where gold makes a little bit more sense. But remember, gang, gold is a play on real yields. Gold is a play on that yield curve. And so for gold to move higher, that curve has to move lower. And so the yields have been moving higher. I don't believe right now, of all the things that I could be building a position in, gold is near the top of it, but at least this is a pitch. This zone makes sense to build some GLD calls. I personally wouldn't, and I love trading futures. I would personally not engage with GC futures, maybe MGC, or I'll look at further dated GLD calls, looking for perhaps a bounce to that recent swing high around 1850 or even 1880. That's the near-term objective. I thought gold would be a little bit more bullish than it was. It's just not. And folks are saying, well, this is Bitcoin. Maybe. I don't think it's the full narrative about gold, but I think that could be a little bit of the narrative. Sure, US dollar could be a little bit of the narrative. But again, gold has always been and probably will continue to be a play on real yields. So keep that in mind. But yes, this is a nice oversold zone in gold, you bet. All right, so next up is, what I'm going to do is I'm going to scroll to, let's see, Spirit hands, diamond hands. Yeah, I'm going to wear my diamond hand shirt this week, no doubt. Riot blockchain. Yeah, let's talk about Riot. We talked about gold, talked about Bitcoin. Riot, Mara. Some of these have done even better than Bitcoin. And I'm going to tell you the same thing about both of these. Know why they're moving, Bitcoin. When Bitcoin pulls back, so will these. So when we see a pullback in the Bitcoin narrative, which we will, I'm not betting against Bitcoin. I'm just talking about the way trends typically move. We get a pullback in Bitcoin, look for RIOT, look for MARA for opportunities, because they are very much tethered. And I would even say Square might even pull back with Bitcoin. So those are all things you can keep an eye on. Know the larger tide, know the bigger why, and then you'll have a better idea as to what will fall in line and the opportunities attached to that why. Or as I like to explain it, we had a issue in Countdown Trader about boats and tide. What is the tide in what you're looking at? In other words, what is the larger narrative that's going to cause movement in the other narratives attached to it? Tide, boats. All right, gang. So as always, thank you for joining me for Charts and Coffee. Love doing this every morning with you guys. You guys are actually better than a cup of coffee. It's great to talk the markets before the bell rings. And speaking of the bell ringing, bell will be ringing in about 9 minutes here. I'm going to head off into the chat rooms. If you're not already a member of one of our Simpler Masteries or chat rooms, check them out. And if you are, I know you guys are making a beeline over to the options room or the futures room or whatever mastery you belong to. All right, gang, I'll see you tomorrow. Same time, same station. Be good to each other.